going to be going over and sharing is the new thing that I'm researching, aka Strategy 3 for our AMD. Now, just bear with this funkiness, bear with Eurocard. Why am I on Eurocard? Have I already started to analyze it? No. I don't know why this drawing's on here, to be honest. But I'm gonna do a random pair too. But anyway, this is what I've been researching.
That's all I ask. Please just get the likes. All I ask for is you guys to like the stream. It takes 2 seconds. And
this is where I got it from.
Then we'll be good. So, as far as what I was seeing today, okay? The only thing, I'm going to show you guys a few 4-hour setups here. Okay, this was one on gold. Okay, check this out. This is a power of 3 setup. And I'll show you how it plays out here. Now, notice. Okay, this is some powerful stuff. Okay,
it really
Ready?
is.
So,
seriously is. It's insane.
I'll leave my sessions indicator up. This is crucial.
And I'm not just saying that. Like,
okay,
I've done my research myself.
This is a power of 3. This candle here, right? Notice 4-hour time frame.
One sec. It also does get mixed up, I've noticed, because this candle in the CFD chart is the 22 or the 23. So just bear that in mind.
Here. All of our EMAs are stacking. Look, 5, 9, 13,
15.
15.
I don't use the 15, 50, 100,
100, 200. No, BG.
No, I'm just gonna skip it a bit.
2 letters TG. We're stacking.
So he says EMAs are stacking.
What do we say?
Don't use the Bollinger Band.
This was a previous setup. This was July 21st. Right? I just want to show you guys something. Drop a little bit of knowledge here for you guys, and then you guys can go and back test yourself. Because I'm going to give you a little speech at the end of this with something that helped me, and hopefully it can help you as well.
Because honestly, this guy is like,
I don't know. It might be a compliance thing that you have to go and do one at a time. It probably goes. You can drop some.
Help if you just got straight to the point.
But
anyway, like you said.
Okay,
anyway.
if you notice this 18 candle, right?
So it's a 22.
One thing that I've added, right, is that I take a Fibonacci.
And he draws it from here.
Right?
They open up the 22 or 23 and draws it to the low.
From the opening here.
They're the most extreme point traders.
To the bottom of the wick. This is something that I've been backtesting and it works really well.
Like to the close.
Is that this candle? Notice you take a GAN box or fib, whatever you want.
GAN box is better.
And I take this from the top of the candle, from the open to the bottom of the wick, right? This 18 candle, this 22 candle, has to open below the 75% of this 18 candles range. Now,
and I've also been using the 72. So if it opens at the 70 at or below, that's fine.
This session's liquidity.
And it also doesn't need to sweep liquidity.
What do we notice
here? It just needs to open below.
You don't enter on this candle yet. What happens, right? Now, this 2 a.m. candle sweeps London and
then
Asia.
Just green
we close bullish, and it's green. Your stops could either be.
Now this is an indicator too, which goes based on volume. Which, like, if it's an up close candle, it only if there's been sufficient volume. I don't know what the calculation is, but just treat it as if there's been sufficient volume, it'll close as a green, or whatever color you set it to. But in a bullish case, I've got mine green, just like his. It'll close green, right? And if it is an up close green candle, then it basically shows that, like, there's been sufficient volume. Now, if you think of the logic behind this, what that means is there's been sufficient contracts traded at that price region, which in up close candle is closed. So there's been, like, actually a lot of people wanting to buy the underlying product at that price region, and it, like, there's a certain sort of interest and intent to trade the underlying product whilst it's sat at that region. So it shows you that, like, yeah, there's been a lot of buying going on at this price region, right? And it's not just dull. So, like, this was a down close candle, but it's not red. So that means there wasn't that much volume that transacted at this region, right? Of prices on this occasion, with the participants participating on this occasion over for our time periods. And
Yeah,
it's gonna
this
and it's
candle
this
low,
indicator
the
right here,
18
bull
candle,
trade and easy
or you
scalping.
can have
So
it
just
a
but
little
you
bit
have to
deeper of
type
a
in
stop
those like bracket
from
things.
here, the 2 a.m. candle, and this is your expansion candle.
And I also don't place
Right
my
here.
stop like that. But
Accumulation, manipulation, distribution.
so if we go
Boom.
to another example,
That's a, this is a beauty.
so you can see
Let me show you this one, guys,
candle
because this one's an
open
absolute beauty.
here,
Okay, ready?
we open
Watch.
below, green bullish, and a stop probably just beneath
What
this
do we
low
get?
about here. Bam. A 1 or
Sweep
2
of a low.
easily achieved. You're
Boom.
not complaining
Look,
at a 1 or 2.
box. Right? Boom. From the high
So here,
to the low,
open
we're
to
opening
the
below
low,
the 70 to
open
75%.
below,
I added the 70, 75%.
and then
That's
just
what
enter
works the best.
on
If it closes in the
the
middle
next
of here,
candle.
if it
But
closes
like
in
if
between
it's green,
70
of
and
course.
75%,
And
that's the
also it can also be if this candle opens below and closes dark, and then this one closes green, for example, you can enter a 7, but like the cutoff is 11 or 10 on the CFD charts, and your EMAs must be stacking, and it must be clean too, so there is a bit of discretion here, which he does also say.
opening. If it
I
closes
really like
below
this
it,
guy.
even better. So what do you see? Sweep of a low. This is Asia session, right?
And
Don't enter yet.
And it is
Don't
more
enter yet.
ideal if it
You
does.
wait until you get this.
So yeah, anyway, you get the C, right? So you said you get the gist, rather. Sorry. So I'm going to close this, and I'm going to show you some examples for some nice what's this? Let me just check what the gig is on this. Oh, yeah, we don't want that, and we'll just get rid of that too. And then just for ultimate transparency's sake, you'll see what I'm going to do here. Please not a bit. Oh my god. Okay. Don't worry, I've got it muted. Right. So, random letter generator. So you'll see what I'm going to be doing here. And then I will literally go on the first forex pair, or actually, well, how are we going to do this actually? Started. Yeah, random market selector. Here we go. Well, it's a good job that they've done this, because you can just do this. Oh my god, right. So we get it, so whatever the first digit is, we'll just pick a currency. We're going to just do Euro card, and then we're going to do another random one, GBP CHF. There we go. So we'll start off with Euro card. I think that's what I said. So we'll just go to full screen first of all, so it kind of goes a bit more smoother. And I haven't looked at this before, by the way, on Euro card, but I do want to get some forex pairs going. But wait, I thought that I was on the active trades broker, because they're 4 hour close at 7, and you know, 6 o'clock. I'm not gonna be awake then. Let's just say that. So, like, to be honest, I'm probably gonna. I mean, you could probably get in late, to be honest, and it'd probably be okay. And I'm gonna look at this first, just on fx.com futures. So these are the markets already that I've tested, and it's okay to implement. And I'm gonna have to obviously buy the futures data, and I'm gonna trade based on the futures charts, but on the on the CFDs, right? And you don't get that many trades too, so like with this system, so like it's completely doable, which is pretty cool. Okay, so look at this. So we could have a trade here. So I am getting used to it. So bear in mind as well, this is the indicator list that I've got. So I'm using I'm using like an EMA 3. So I've got the 50, the 100, the 200. Here's the colors that I'm using to differentiate. So this is your 200, this is your 100, this is your 50. And then I'm using the 5, the 9, the 13, and this is my colouring. And also, I'm pretty sure I'm using open, high, low, close for. Oh no, I'm not. I'm just utilising the close. So basically, what this is showing is the close price of the past 4 bars. For example, look where my crosshair is. So whatever the EMA is at this point, so you can see it's like around like here. Like 150607. That is just basically the average close price, and I'm pretty sure it's weighted to the current bars, but basically it's the average close price divided by 4, and then it gives you this whole digit basically. So and then it basically shows you the average price that traders have been transacting volume at within the last 4 or 5 time periods, right? And it just basically provides an insight into what sort of like where's the underlying product being traded and where traders been happy trading on this occasion. And it just kind of, and then that line that's moving just provides us like a bit of a comprehensive insight into like how primarily the market's been like in the X underlying product is being traded like. But like I'm not going to go on some tangent here, so don't worry. And also I'm not in the frame of mind to do so because I'm not that well. But anyway, this is the indicator list that I'm using in obviously bull trading, and this is my settings, same as TGC as I've referred to him as, TGC, TG, whatever his name is. Yep, so that's it. And then this is my style. I'm just utilising this colour, and then I'm utilising this, and then this is black. You can see. So there we go. So that's what I'm using. But anyway, now let's get into some charts, research. So, and also what I have to notice that I've had to do is sometimes like this bar can close up, but like it's black, so you don't really know whether it you don't know whether it's closed up or it's closed down. But like I like this indicator a lot because it shows you based on volume, like whether like the region that the market is sat at, like on this occasion at this price region, whether there's been sufficient buy-in or contracts exchanged hands on the buy side if it's an up close candle at this region, meaning like there's actually been a considerable amount of units in this case. Well, not units because that would be one. I know there's not a futures market for this, but whatever, contracts like exchange hands at this region, and just basically there's been sufficient trading behaviour on the buy side here. Now anyway, you can see that this candle did open below the 70 and 75, so it's optimal. And you can also see the EMAs are stacked, to be honest. I know TG Capital said for it to be above the 9, but I've found that if it looks clean and it's okay, it's fine to take something like this. Now this is obviously a bit experience based, and honestly I'm not distorting myself. Like look, you can like if you're a beginner and you don't really have that like market like experience, let's just say, you can look at it like this and be like, look, our EMA is stacked, and is this clean? It's like, to me that's totally clean. And then also I also wrote out some logic the other day of what the logic is behind this like system, right? And that goes as follows. So the logic of this approach is that the EMAs combined with the sufficient volume comprise closed candles, identify super high probable circumstances where a strong intent to trade, the underlying product being looked at, exists, right? And the EMAs show that. Now, honestly, my head is numb right now, from just feeling a bit under the weather. So I'm not going to try and explain something and end up going on some tangent and spoil this video. But anyway, I then said, that we look to capitalise on by waiting on the arisal of a distinct sort of interaction, what goes on with the underlying product, which this sort of interaction has been witnessed on, that this further distinct interaction goes on with how X underlying products market goes on to be traded underneath these circumstances of a strong intent to trade existing at the current region that the marketplace is sat at for X underlying product, and how the traders operating on this occasion are willing to deal with X underlying product at this current region. And then we look for a like pattern type thing like I'm showing here underneath these circumstances. And anyway, you can see that we'll get that here. EMAs are stacked on top of each other, and then you can just enter and then look. This is the first example. It's not cherry picked. It's pretty insane, to be honest. But like, I don't place my stop loss like TG Capital. I place, and I honestly think this is like a model, like no distort perspective. Like, unless something completely changed with it, which I don't think will happen. Of course, I need to do more research. This is like a model for life. Like, seriously, like, mate, you could easily utilize a 1 to 1.5, not just because of this example. I've got many more on this system, and you would probably have somewhere around a 50%. Okay, yeah, that's good. A bit above doesn't show, but you could honestly probably have a 50% strike rate with with a 1 to 1.5. I mean, here, this is ES. You probably would have took a loss. I'm not going to go through them all. Here, you probably would have took a win for a 1 to 1.5. So let's just quickly do it. So you got 1 loss, 1 win. Here, definitely. So there's 2 wins. I'm pretty sure this is the same example, or does it just look extraordinarily similar? Yeah, it's the same example. So there's still 1 loss and 1 win or something like that here. This is okay. This would have been a smoker, so that's 2 wins, 1 loss. Here's another 1 to 1.5, so this is 3 wins, 1 loss. Here is another 1 to 1.5, so this is 4 wins, 1 loss. I'm not gonna keep counting stuff, and this was also 1 to 1.5. I remember this trade. I don't think I showed it though. No, I didn't. But it literally went to like 1 to 20 or something. Here you would have took a loss, whatever. Who gives a shit? You're a major profit. Here was I think it might have not went 1 to 1.5. So you can see I'm not distorting myself with this. Here was actually a loss with even 1 to 1 to 2. So yeah, here, like, you would definitely be profitable, 100,000,000%. And I think here you would have got a 1 to, maybe 1 to 1.4. No, sorry, a 1 to 4. Jesus. It's because I'm used to having a 1. Yeah, here's definitely a 1 to 5. So yeah, you here's in a 1 to 5. How beautiful is that? This is also the ES2. This is the S&P 500. So like, and this was also 1 to 1.5. This isn't current day. It was just a point that I had to scroll back to. I'm pretty sure anyway. I think. I cannot remember. Here's a 1 to 5. You can see that. I think this is this trade. Oh no, it wasn't. Whatever. Here, this was a beautiful trade. Look at this. So this is your 23 candle. It's futures, remember. Open here, you open below, end at 7, bam. How beautiful is that? Easy 1 to 1.5, easy 1 to 5 risk-reward ratio. And I'm pretty sure I do also have other examples in this chart, but I'm not going to show them because there's some stuff in there. But yeah, I wouldn't have my stop loss here. I would probably have it just a bit below. I'd probably give it about there, but as you can see, you still would have got a 1 to 5 pretty easily. Yeah, like more than easily. So, but like, I don't know, you could easily, I don't know, because like, I think with this approach, like, there's no point going to 1 to 3 because like many of the trades, if they go to 1 to 3, they'll run 1 to 5. You know what I mean? So it's like you're kind of cheating yourself, and that's also what I found with a 1 to 2. You don't really want to just have a 1 to 2. You would rather have a 1 to 1.5 because you would capitalize on every single trade. I think you wouldn't have had a loss. So anyway, you can see here, I'm just going to mark up a 1 to 2 because that's just what I've been marking for now. But yeah, you get the gist, right? And just for time purposes, I'm going to just go through some more of these trades and just basically see whether they would have went 1 to 5 or not. As I can always change them back, right? So we've already been through the ES. It would just go, because I bet there is a sweet spot for sure for like certain markets too. But like, and it could even be a 1 to 3 to be honest. But I'm just so yeah, there's a beautiful 1 to 3, and also what I'm also possibly thinking of doing is jumping in on the lower time frames potentially. So obviously he has an easy 1 to 3, but like even more. Here's a 1 to 3. Here's a 1 to 3. So every trade is run 1 to 3. Now you're not complaining with that, but I would probably risk 1% on this because I'd be trading multiple assets or markets, whatever you want to call them. Oh, that would suck. Oh, actually, to be honest, if I was active, I'd probably close. But you know, you never know, that this could have been a loss. That I would probably just about there, just about at the body. So yeah, that's a win. I know how that's going to come across to those who haven't been with me for a while. It's going to look like complete cherry picking, but like, or adjusting the trade to the outcome. But no, trust us, I'm not like that. Genuinely, with a strong bar close such as that back there, you wouldn't want that big of a stop as I did have placed. But like, yeah. Anyway, so that's all the trades. So all of them went 1 to 3. And I'm pretty sure all of them on the ES also went 1 to 3. But let's have a look. So yeah, I really, really, really like this model. It's absolutely so cool. I'm looking to start trading this like from next week and see if we can catch some things. And it's like on the 4 hours, so it's like really chill. You know, you're only kind of operating around the 4 hour close points, which like I have available. And it's just it's just sweet. It like really is sweet. It's neat, as Americans would say. So I'm pretty sure here would be a 1 to 3. Nope, so that's a loss. Oh well. Would you have your stop there though? Probably. You probably would have your stop there. So there we go. If I wanted to, I could easily move it up and be like, oh, there's another way. No, I would have took a loss there. Here's a 1 to 3, and also what I could also pick up upon as well for ES, maybe it's better to use a 1 to 2, right? Or gold, maybe it's better to use a 1 to 10. You know what I mean? So, it's like these circumstances, what this criteria, what identifies certain market, like identifies when there's like the circumstances of when there's a certain intent or level of intent to trade with one side of the market. They are super powerful and they work on everything. It works on literally everything, right? Here's definitely a 1 to 3, probably. Okay, never mind, there we go. There's another loss with a 1 to 3 on ES. But like, what was I going to say? Yeah, but some markets I have actually noticed that it might be better to tune them, like tune the risk to reward accordingly. So you can kind of see this market doesn't really like to run 1 to 3 straight away, whereas on the Dow it does. So on the Dow you would definitely want to use a 1 to 3 just based on the past year. Maybe it's on ES you might not. I think it would be profitable. Well, no, it definitely will be. I mean, look at all these, like they're all 1 to 3, you know, and I'm pretty sure it had more trades, but like that looks like a 1 to 3. Oh, maybe it's not actually. Would you have had your stop there? Yes. Yeah, defo. Okay, well, this probably isn't a win. No way. It seems like it goes 2.5. Seems like a 2.5 looks good, and you definitely would want to get that extra half R, because that, like, you know, if you're yeah, you're not that's like $500. Well, if you're on a 100K account, yeah, it's like $500. You're not complaining at that, and especially if you can get it every single time too. So, like, here easily 1 to 3. Here, easy 1 to 3. Okay. Oh right. Wait. 22. Oh yeah, I went a bit further in this. Here, easy 1 to 3. I think that's it. Or I think actually I went to June on this on yes. Yeah. Wow. Holy shit. So obviously, as you can see here, I was just playing around with things, you know. But obviously, that's a clean 1 to 3. Clean 1 to 3. So you can see here again, goes 2.5 and then reverses. So I think we've identified what we'd want to use on here. So if we just go through them all again, scan through them, particularly the trades that like went 2.5 and then reversed. So here, we would get a 1 to 3 there. And there's no BE going on here, by the way. I'm not BEing, so... Oh, well, actually, I'm not going to be a guy. I haven't actually tested it, so... Because it actually might be good. But, anyway, here, so here, if you didn't BE, here's a trade where you would have lost on. To be honest, BE does kind of make sense, actually. Because if the market has came down after expanding like this and it comes back up, I haven't really seen markets like come up and then like go up and then come down and then go again. Haven't actually seen that. But anyway, here would be an extra 2.5 R instead of a loss. All of these trades would be fine with 1 to 3. This would be an extra 2.5 gained, and as you can see, B would have worked nice here. I think B actually would be good. So what's this? Does it go? Yeah, that would probably be fine with 1 to 3. This would also be fine. Oh, well, actually, hang on. This might not be fine with a 1 to 3. It might be, because this is a nice bar close, right? So you could have your stop. In fact, I would probably say that's probably a loss. Here would be an extra 2.5 R gained, half R gained, and to be fair, I would just say it looks good with 2.5 R. So like when you risk 100, you make 250. You're not complaining at that. So we'll look at the Russell. This is also probably going to be like Dow. You can see. I'm going to carry on this video in a sec.